Good morning. We'll talk about that in a second, but it is Wednesday, July 9th, Stocktwits Nation. This is the Daily Rip Live. I'm Katy Perry here with Shay Boloor, and with us today, Stocktwits Editor-in-Chief Tom Bruni. Shay, I don't know what that shush move was.
I got to take notes. That was a good one.
The hair flip. I feel so. Just so you guys know, sometimes we don't see what this looks like before, so we're with you on this journey of the dancing. I like the spacesuits. I like the bear suit. Tom, how have you been? Happy Wednesday to you. What's going on in your week so far? Any highlights?
Yeah, happy Wednesday. I never see these before they go out, and I'm just they're getting more and more unhinged. So I've gotta like remove my rights or whatever they call it. Like I don't want to be part of this anymore.
Don't want to be that. Yeah.
But,
I mean,
yeah.
You have
Overall,
some,
it was fun, but it's not fun anymore, guys.
Yeah, you guys should see the producer chat. Everyone's like, "What the hell's going on?" Tom's
I
moves
did
are
not
always
know what I
spicy
signed up
too.
for.
Yeah.
Yeah,
You're
exactly.
bumping and grinding. I'm like, whoa, okay.
All I can say is like whatever video program we're using definitely nailed my personality 100%,
Yes.
as you can
Yeah.
tell. So, but yeah, it's been a relatively quiet week in the markets. A lot of macro stuff front and center. Bitcoin sticking near all-time highs, so people are looking for a breakout there. But in general, earnings season kicks off next week, so a lot of people are just moving their attention towards that and preparing for the big banks and all that good stuff. So.
Yeah, I mean, we were saying it felt slow earlier in the week, and then we got some sprinkles of news yesterday. The copper tariffs. Copper's not something we talk about all the time on this show, but there's going to be tariffs on copper. Copper is very important material, obviously for semiconductors, AI. I think Chile is the largest producer. The U.S. produces about as much as China, and we're obviously trying to bring some of that back domestically. Tom, in the community, are you seeing any increase in activity or conversations around domestic copper mining companies?
Yeah, we saw a brief kind of stint of people caring about it for the hour after the tariffs were announced, but most retail investors and traders are not trading copper futures. They want to know, like, how does this impact my portfolio today? And I think this is more of just another macro headwind to deal with. I mean, copper prices being at all-time highs, if it was because of rapid demand and economic growth all over the globe and China expanding, like it would be a good sign. But because we're kind of seeing it happen for a supply reason where we're just basically raising the price on ourselves, that is kind of something that people are worried about in the short term. But yeah, Freeport-McMoRan, a couple of the other copper related ETFs, CPER is the one that tracks the metal itself, and then COPX is a copper miners ETF specific. So those saw some increase in activity, but again, like most people are not trading these stocks. They move just when there's news like this. So yeah, it was kind of a flash in the pan, and people moved on to the next thing.
Yeah, I was kind of exploring copper a little bit on the subway. Not something I know a lot about. A lot of it is produced in the Southwest U.S., Arizona, New Mexico, and like you said, there's the copper futures, and then there's these mining companies, which are fairly speculative investments if early on, right? Because they're almost similar to a biotech where they find the the land, they figure out what's there, they don't really know what they're going to get until they get there. And so you're
Yeah.
sort of betting on them getting a good get in the locations they pick, but it's not necessarily guaranteed.
Yeah, it's a huge gamble. I mean, there's so many steps along the process that could go wrong, and it's a very capital intensive business. Even with gold miners, right? Like people, gold has been trading at all-time highs for much of the last 2 years. It's making, went from 1,800 to over 3,000, and yet a lot of the gold mining stocks are just now reaching their peaks that they made in 2011, and that's because like the business that they're in of what they sell is at all-time highs, but their costs are also higher. Their
Mm.
The amount of mines available to find new gold, production is down. So I think, when people are trading commodities, a lot of times they'll look for a direct way to play it. That's why you see the ETFs as very popular vehicles, because when you're betting on the actual businesses, there are so many factors that go into an individual company's performance, particularly when it comes to capital intensive businesses like mining. So, yeah, there are a few popular ones, but most people just trade the ETFs or, avoid the sector entirely.
Yeah, it's always interesting to see something like copper in the headlines. It feels very old-timey, covered wagon, and then you have Nvidia, Coreweave. I know, Shay, you just tweeted something out with some news around Coreweave. We've talked about them in the past. I know you've described them in the past as sort of a wrapper, but I'm curious what is the update with Coreweave? I know they also had some M&A news as well. But can you share a little bit about what you posted earlier this morning?
Yeah, they're the first. Let me pull it up real quick. I think I don't want to butcher this, but I do believe that they are the first cloud provider to make NVIDIA's Blackwell GPUs generally available. Again, I think this is something that it's such an interesting middle ground between a long-term investor and a trader, because my bearish ethos on CoreWeave is obviously 5+ years out. I just don't believe in their business model, because they're essentially the margins are always going to be capped because they're going to have to pay up for the latest and greatest. And right now it's working. Their backlog is just ridiculous. It's in the billions. And it's because there's an influx in supply and demand. So that eventually I do think is going to erode, where it's going to be a lot more even balanced and even keeled. Um, and that's why I'm like, Microsoft's their Microsoft essentially is the biggest customer. A majority of the revenue comes from there. They get all their supply from Nvidia, and they're just renting the moments. Like, that's my whole thing about CoreWeave. However, who knows how long this like data center explosion is going to last, where the supply and demand is going to be tilted on. There's way too much demand, not enough supply. That it could last years, and this could be a moment for CoreWeave where they could become like a mega cap in some fashion. And the reason like the innovation between all these like Nvidia chips is significant, because like for this Blackwell, for example, like you guys hear me constantly talk about the inference explosion we're about to get. If you guys don't know, inference is the tax on AI. Just think about it that way. This Blackwell is like 6 times as fast and the LLM inference than the previous model. So like, again, the latency is going to be reduced. And I do believe that it's these jumps from like Hopper to Blackwell. It's not just like, oh, a 20 to 30%. It's like, oh, it's a slight improvement. No, it's vast. It's massive. So if Nvidia keeps like innovating these Hopper to Blackwell to Rubin, I always forget the fourth one, but uh, it's Corey might have a place for as this like neo cloud cloud provider, neo cloud, to like just continue printing. But I just don't think they're not even profitable. Like, I don't, correct me if I'm wrong, but I don't think they're even profitable yet, even when the supply is the demand is exceeding the supply. Yeah, they're not supposed to be profitable till 2029
Wow.
is their free cash flow.
And so the Core Scientific news, do you like what they were a customer of Core Scientific, right? And just spending a lot of money, and they figured we just should buy them. Is that what happened?
Yeah, it was vertical integration,
Yeah.
synergy, OpEx bumps. I mean, OpEx improvement from some financial engineering, M&A. It's
Mm.
to be honest, like I it's an all stock deal. That should tell you everything you need to know about that merger. Like it's just not that big of a tailwind in my opinion for the stock.
Yeah. And CoreWeave obviously was one of those IPOs people got excited about. Tom, any chatter that you observed in the community, or were you hearing anything in Stocktwits about either this deal or CoreWeave in general as of late?
Yeah, so just in general, I mean, there was kind of some skepticism around this IPO initially, and then when it finally gained some momentum, that's when traders kind of hopped on the bandwagon. It was interesting as the stock made new highs in June. The Stocktwits community was turning relatively bearish, so they were kind of ahead of this price stabilization that we've had over the last couple of weeks, but now we're seeing sentiment start to uptick again. So to me, that suggests when we're seeing sentiment and message volume start to tick up, but price hasn't moved yet, that suggests to me that the community and retail in general is looking for the stock to make its next move higher. So that's something to watch for. And I think, like Shay said, it's an all stock deal. The company's doing what they should at this point, right? They're not profitable. They don't I don't know how much cash they have, but when your stock is at an elevated market cap, your job is to go out and make growth bets and use your kind of stock as currency to go out and finance those. So, tailwind in the a headwind in the short term because of the dilution effects, but in the long term, if this bet pays off, then it'll be accretive to shareholders. But I think what I'm watching is how the stock responds to this, and so far the response has been pretty muted. If the bulls can start to take control again, here and get some upside momentum, that tells me that the short-term dilution issues that we're seeing with this deal are being looked past, and people are looking towards the kind of brighter future. So I would say, if the stock can get above yesterday's high or even last week's high of 166, that'll signal some, renewed short-term momentum.
All
I
right.
also I also do want to add like these are momentum trades. Like CoreWeave and Circle, for example, like if things are humming like it has been in the bull market rally, what do you want to invest in to have the biggest alpha? The two levers are AI and crypto. That's why CoreWeave and Circle are going bonkers since their IPOs. Is they're the perfect benchmark or ethos of this rally, and they're just catching major bids. Like what, Circle 4x since their IPO price? I think Coreweave, same thing. Like that's a massive move. I would not be surprised though if those are the two names that get punished significantly if there's some wonky black swan events that causes the market to pull back even 5%. Those names could go back 30 to 40% in a blink of an eye.
Yeah. Let's talk about, we mentioned sentiment, Tom. I know there's been people in their feelings about one stock in particular this week, BigBear.ai, which is a US-based tech company. They do AI-powered decision intelligence solutions, which we were discussing before the show.
It's a bit of a word salad.
Yeah, not quite sure what that is, but Shay, as you mentioned, it's people are looking at them being like, cool, I think I might have found the next Palantir. And that's part of the reason why there's excitement. But this is a stock that's been memed for years since it IPO'd. Tom, what's going down with Big Bear right now? Why are people excited about it? And what are you seeing in the community?
Sure. I think so just some context here. Like part of my role as editor in chief and just kind of VP of community is to highlight the value of our data and show people how to use it. And so in many cases, sentiment data is often used as a contrarian indicator, right? If you were just following the crowd for everything, you wouldn't need sentiment data, but you're looking for potential inflection points. And that's essentially what I outlined here. Basically, the stock is up 260%, even more yesterday with yesterday's move. It's up basically 300% from its April lows. The stock has had this massive run. And basically what I flagged is that we're seeing retail sentiment peak at similar levels that it did at the end of the last rally in February. So Stocktwits sentiment was extremely bullish. It's been extremely bullish this entire run up. We're now at those levels where we're seeing both sentiment and message volume start to roll over, which suggests to me that it's getting harder and harder to find that next marginal buyer, right? Like who's the person that's going to buy a stock that's up 300% in basically 3 months. And, it's the momentum trader, it's the short-term person. And if you combine it with technicals, like again, I'm a CMT, I'm a technician, so I look for trends and reversals here. If you look at something like the relative strength index, which is a basic momentum indicator, the last 4 times we got this overbought, basically above 70, the price started to pull back, and that's all I was pointing out. Like after a 300% rally, it seems like momentum is losing some steam, and retail investors and traders should pay attention to this because again, if you're playing the momentum trade, it's important to know when the momentum is fading. And so yeah, definitely took some heat from the community on this yesterday, but again, I'm just the messenger. I'm trying to share some insights that might be helpful, and some people found it more helpful than others. But yeah, it's still in play, so we'll see how things play out over the coming days. But yeah, definitely a lot of momentum here and a lot of fanboys and
Yeah.
fangirls for this.
Shy, and you pointed out them and SoundHound talking about people kind of jumping on that and them catching a bid based on just how things are moving in general. I think Tom's making a good point of like, how do you determine when it's a momentum trade versus it's something you're picking long term as part of a trend that you think is going to continue and that they're going to win out. So when you look at like a Big Bear or a SoundHound and you're thinking long term, even if it fits within your thesis, what are you looking for to kind of decipher between those two things?
I mean, regarding SoundHound, I know I'm surprisingly in the minority in this thesis, but I think it's really important in this future in the new digital economy to actually own the stack. Like that's why you're seeing Meta make that Scale AI acquisition. You're seeing Google's whole strategy has been that, and you're seeing Apple attempt to do that. But regardless, like I think it's who owns the end-to-end stack. So like the distribution, the infrastructure, the compute, applications, etc., interface. And I think that being good at one layer isn't going to be good enough anymore in the future because of this vertical not platformization, but like just there's going the AI tsunami I'm talking about, it's going to attack layer by layer, and the bigger whales out there, like the hyperscalers, etc., they're going to continue providing in-house solutions for each layer. So if you're exceptional on one layer, you're ripe for disruption, especially when it's it's just a wrapper of some middleware, and that's what SoundHound is essentially, in my opinion, because like that layer is very exposed to commoditization. Like voice doesn't win by being accurate; it wins by just being embedded. It's kind of a low-hanging fruit. I think SoundHound's building a compelling product, but it's just kind of for an environment that's no longer going to exist going forward, where great tech could probably survive its own merit, and it's just not going to be like that today. So again, SoundHound is just like renting access to its platform that it doesn't really control, like has no control over the operating system, does no control of the hardware, the cloud, distribution rails that define actual user capture. Like they don't have that. So SoundHound is just like a product. But regarding Big Bear, I mean, everyone's looking for like, even right now, like they're seeing the names that run the Palantirs or Robinhoods. Robinhood, what's next? They're looking at Webull right now. What's a Palantir? It's freaking ridiculously expensive now. What's next? They're looking at BigBear.ai, but you have to know the differences. Yes, they're both like kind of solving predictive analytics, but and data integration, but it's really drastically different. And like everyone's saying, oh, Palantir's over 100 times the valuation as Big Bear. It's for a reason. Like even right now, when there's a boom in AI, like what's Big Bear's top line revenue growth? I think it's 2 or 5%. It's minimal, and it's primarily government angle. I don't think they have any kind of commercial momentum. I I haven't looked into the stock too much, but like I think they've had multiple CEO changes recently as well. And I just think that it's this, you have to be very specific in this new like world we're about to enter, and like a company that has not grown really. It's you're seeing like even Samsung is like reporting awful numbers just yesterday because TSM is just the king. Like everyone's paying up for the best product. Second fiddle, those days are over. Everyone's going for the top cream of the crop. So I think that Big Bear, like, maybe it has a place getting acquired, but I don't know. It's a momentum trade. It's a lever you pull. It's a trade you pull
Yeah.
when AI is hot right now. And Big Bear is clearly an AI lever you can play to get some kind of alpha.
Yeah, I mean, I think when we talk, it's interesting. We talk about just like the future of like tech juggernauts, and when Michael's here, like it sounds like the big players have such an advantage in terms of vertically integrating, only getting bigger. They're buying data centers, and so. But on the other hand, Michael says we don't even know who the next Google's going to be in this wave. But what you're saying is just because something is smaller than something else that's crushing it, that's not necessarily equal to they're definitely going to make it. And so I think when you talk about weeks like this and going back in the lab and doing your research, I think that's the part that just like takes time. Understanding these businesses, and it's a full-time job for a lot of people, for you now, and but I think you're making good points there. Any other stocks in the community, Tom, that this week you're seeing people gravitate towards or pop in the news? I did spot, actually, let's go to this first. Apple. This was interesting. Apple's COO is retiring. So Jeff Williams, a lot of people thought he was going to succeed Tim Cook. He's announced he's retiring. He's been there 3 decades. Uh, Sabi Khan is going to step into the role as the COO. He is an engineer by trade. And now it's kind of putting into question, like, who's next in line. It could be someone from the hardware side, that's John Turnus. It could be somewhere from the engineering side, like Craig, like I'm going to butcher this name, Federici. Oh, Federici. Or it could be Sabi Khan. So I'm curious what you guys think about this leadership change, but also in thinking of Apple. Do you think they're better suited for someone who's hardware focused in that seat in the future, or software focused? I'll start with you, Tom. Or Shy, if you were going to go.
Yeah,
No,
I'm not the person to start with here.
Okay.
Shy, go
I
ahead.
mean, I'll start. I think the team is dismantling. I think I've been a part of a lot of those rooms where the pressure has clearly been on and they have not delivered. And you're going to see these little pieces getting just like shaking up the little executive room on, like, let's get some new spice in to like buck this trend. So you're seeing the COO leave. Like, you're probably going to see a couple more executives leave as well. It's something that's a normal practice in the corporate world, but it's not going to move the needle on any kind of innovation because it starts from the top. Tim Cook is not a product-oriented CEO. I think right now Apple needs a product-oriented CEO. Is that via a massive merger? Like I said, OpenAI merges it with Apple in 2 years and gets Sam as the new CEO? Maybe, but that's first off way too tin hat theory. That's never happened in the history of Apple. Maybe it never happens. Is it acquiring Perplexity so they can actually get into the AI race? Maybe, but I don't know if that Perplexity CEO is the right fit for Apple. I just think that AI talent is the fuel for this race for super intelligence, and you're seeing that right now with Zuck prioritizing that, spending 15 bill on a shadow acquihire on an Alexander Wang, building the super intelligence team, offering $100 million bonuses. That's what's going to fuel all the innovation for the super intelligence race. I just don't think the big AI brains want to work for Apple. I really don't. I was surprised that one of the super intelligence team members was from Apple, but apparently they did have some talent there. But I just think that you need, like, if you're a 23-year-old freak, you think you're gonna elevate the world on this new super cycle of AI, are you going to work at Apple? It doesn't have that same aura anymore. You're going to work for the greatest minds of this generation: Zuckerberg, Elon. You're going to work for Meta, XAI, OpenAI, Sam Altman. Those are the 3 names that you want to be in the vicinity for, to just gain their insights and improve yourself. You're not going to do that at Apple. So I think Apple has a massive talent issue that's causing their lack of innovation in-house, and it's going to force them to go external to participate in the AI race, and they're going to have to pay up like they haven't been in the previous history. I don't think they've ever had to make a splashy acquisition just for talent, because I think the Beats acquisition was a purely product. It wasn't
Yeah.
really anything else. So yeah.
What do you make of, so Zuckerberg seems to be collecting people at a faster clip than others, which I don't know, kind of surprised me. Because Meta is not necessarily seen as leading in AI. So do you think it is like a personality contest almost, and he just seems to be winning out, or is it just about they have the most cash to pay people?
No, it's definitely, I think it's a little combination of both, but I think it's 25% cash. The majority is Zuckerberg.
Interesting.
You product oriented CEO, founder, he disrupted social networks, and I think that a lot of people, like, there's an aura around him. So for me, for specifically, if I was just in their position, it's a no-brainer. Like, the monetary, like, I don't think it's gonna be too much more. If I worked at Apple, probably not. And I gotta be in this like ego boosting team called super intelligence team that Zuck handpicked. That's something you can brag about. It's a new form of Rolex in a way, where you're just like, yeah, I mean, Zuck picked me. I was on
Yeah.
that Elite 12. So
Yeah, it is. It's starting to feel very sporty with these announcements.
the
Like it's,
AI free agency is real and bigger than NBA free agency.
yeah, I want like a decision style show where someone does the LeBron and, breaks the heart of Apple and goes to Meta. I think that would be interesting. Tom, you mentioned earnings earlier. Let's shift to that because I didn't even, this came up fast. We got a lot of bank earnings next week, right? We got Wells Fargo, JP
Yeah,
Morgan.
they'll kick things off later in the week as they normally do. I don't really know what to expect this earnings season, to be honest. I think there's a lot of still a lot of uncertainty around the tariffs and macroeconomic environment, so people will be looking for reads there. But I still don't think we've seen enough in kind of the hard data for companies to make like massive shifts. Like again, we're not seeing that in the employment data. We're not seeing it in the manufacturing data just yet. Like I think it might take until the fourth quarter for us to really see any material adjustments out of companies. I think for now we'll continue to see a lot of the trends we were seeing before, which is consumer demand kind of waning, especially on the good side, while people continue to spend on experiences. I think a lot of the trends that have been intact will kind of remain intact. So we'll see, but I think the biggest piece is like where does we've had record corporate profit margins for several many quarters in a row now. So what is the next catalyst to help companies maintain that? And if they can't raise prices and they're facing cost pressures, where are they going to get that? Chances are they're going to continue to cut costs. So I think that's what people will be watching closely, because decisions around individual company employment is going to affect the overall employment picture of the U.S., which has been softening, but not quite in crisis mode just yet.
Yeah, it's always interesting to see once there's the opening bell. Uh, when earnings seasons kick off, I think some keywords, phrases start to emerge and then just dominate like the word cloud of that
Yeah.
season. And I think you're right. We've had companies kind of like not leaking, but just revealing like huge rifts on the cost cutting side. So I think that's going to be interesting to see if that's the lever they pull. Who else? I think Microsoft was 9,000. We had Procter Gamble was 7,000. Lots and lots of jobs going away, and we talk about that a lot on the show. We
Yeah.
also have, in addition to the bank earnings, Netflix reporting next week. We have Pepsi. I know our friend Jake will have thoughts on that. Shy, do you have anything to add to earnings season? I feel like your key players aren't up quite yet, but what do you think the emerging themes will be this cycle?
Tariffs. This is the first earnings cycle where you actually see the tariffs reflected in the earnings, and I think that we got a lot of commentary previous earnings cycle. Like, oh, April's weak, May showed some bounce, but like we're really going to see the proof in the pudding this cycle. And I think that I see a lot of commentary that it's going to be a universal beat across the board because how conservative everyone was in the previous cycle, from guiding down, taking guidance away, etc. That's not how things work. Like, yes, initially, but earnings estimates have been revised up on the streets in the past couple months. So you need to ask yourself what's being priced in already. A lot of these stocks, past 2 months, They're catching bids, not on an earnings expansion reason. It's on a multiple expansion reason. That's dangerous because they don't have to beat. They actually have to guide up now even more. And guess what? We're still in the sandbox of a tariff war. Like, yes, things are a little we have a lane now of our risk, but there's still risk. If you're a CEO, you're not going to be on the aggressive side on your guidance. So I think their expectations need to be anchored a bit, and I think that this earnings cycle will be tamed. It will be. And I think the names that will catch bids are the lagging names that maybe will play catch up, but I think the names that show a ton of strength this all year, I don't know what kind of numbers they have to report to really catch a bid. Like, it's going to be substantial. It's going to be exactly. Here's a perfect example. Palantir's price action last earnings cycle. It went down. It was an incredible print. Excellent. A lot was priced into it. It went down 6-7% that one day. Slowly caught up to where it was pre-earnings, and now it's a little higher. Same thing at CrowdStrike. CrowdStrike was down 8%. Now it's slowly filled that gap. Now it's a little higher. I think it's going to be a lot of that this upcoming earnings cycle.
Yeah, and taking a look
Yeah,
at where
speaking-
oh, go ahead, Tom. Go for it.
Yeah, I was just gonna say, speaking of like to me, it's less about the earnings and more about the market's reactions to earnings. And I think we saw kind of a similar action with Nvidia for not last quarter, but the previous 3 quarters. Essentially, they had 7 quarters in a row where they had crap, I can't think of the word, but they essentially beat earnings, beat revenue, and then raised guidance. But for 3 quarters,
the triple double
Yeah.
of earnings.
Yeah, so the stock basically did nothing or went down on that news. Last quarter was when the first time we saw actually a positive reaction, but that was because the stock traded down into it. And so again, I think it's an expectations management game. And I think on the corporate side, management and executives are looking to manage expectations for their shareholders for the rest of the year as they kind of identify how they're going to navigate some of these headwinds around tariffs and whatnot. And then for investors, a lot of these stocks have run up significantly ahead of earnings season. And so, like Shay is saying, unless they can really beat and raise, you might see a pretty tepid reaction in the overall stock. And then you mentioned Netflix. I think I just want to point out Netflix and Spotify have been on like these generational runs lately, and it's crazy. Like Netflix is up over 700% since its 2022 lows. Spotify is up 1,000% from its 2022 lows. These stocks have just been quietly like trending to the upside for much of the last 2 years. So I don't know when the kind of earnings or fundamental picture catches up to them, but it's really hard to believe that this this type of run can continue.
Spotify's sneaky. I don't see them a lot, like in conversations on some of these momentum trades. I'm not as deep in it as you, but I don't know what you think, Shay. Like that's one I wasn't watching that. I completely missed that.
Well, no, it's a safety blanket in this whole like geopolitical tension. Like, it's not an American company. It benefits. It's got a lot. It's like same thing with Netflix. A lot of their they have a lot of global currency that the de-dollarization actually benefits them, and I think it's something that's such a sticky mind share in everyday life that you're not going to cancel. So that's helpful as well during the recession. There's some recessionary conversations before. Like, a lot of people forget about that, but there was an actual real worry we're about to enter a recession, especially with that negative GDP growth we got in Q1. But yeah, I mean, I don't know the upside scenario on Netflix or Spotify. I think Netflix natural derivative of next growth for them is going to be clearly be gaming or something in the sports arena, live sports, and they can leverage that due to they figured out how to the business model works. The streamers couldn't figure it out, and that's a massive moat, especially for eyeballs in the new currency. But regarding earnings, yeah, I mean, we're in a really difficult position for me specifically because a lot of my top holdings, even if they went down 40-50%, I don't know if I'd add. That's the scary thing of like we are so extended right now that even if we got a pullback, I just wouldn't feel the urgency to add. And I feel like we desperately need a digestion period. And I think that my soldiers, like what I'm allocating my soldiers to be in the next rest of the year, isn't going to be towards these growth tech names have proven they survive the AI tsunami and actually thrive, it's going to be kind of towards those bigger players that have a market disconnect with what's actually happening under the hood. And yeah, it's a really interesting dynamic a bit right now. I don't love it, to be honest, but it is what it is.
And yeah, I think you mentioned earlier, Tom, like entertainment, escapism. I was actually talking to an investor, a prominent investor yesterday for an interview that's going to come out later. But I asked, I was like, all right, you get lots of pitches coming across your desk, lots of people asking you for money. What is the thing you're like very interested in? He said, sports, entertainment, anything escapism. And like to your point, even in a recessionary environment, these are simple, somewhat low budget pleasures that people are grasping onto no matter what's going on in the world. So it is, it's not the AI trade or crypto, but this is something that I think really smart investors are watching.
Yeah, I think the value proposition is just so great for like Netflix at $20 a month. Like you can either get a full library and watch it from home and have full access for a month, or you can go see one movie at AMC. And
Yeah.
it's like, I don't know. It's a pretty clear trade-off to me. So
It's
I think
sticky
that trend will
too.
continue.
Every other month that's like, oh, your Paramount Plus just got charged. I was like, didn't know I had that. Didn't remember that. Think I was
Yeah,
trying to watch.
same. I'm like sick, but I probably use it like one. To me, I'm the type of consumer, like I probably use each of them like a couple times per month. But
Yeah.
like when I want to sit down and relax, I want options. And like I tend to gravitate toward, HBO has some, more original series. If I'm just
Yeah.
looking for junk to watch in the background, I'll put on Netflix. Like
Yeah.
I like having options. And even though it comes out to like the same price as like a cable bundle probably used to, I don't really care. It's fine. It's low
Yeah.
enough cost where I just like eat it and enjoy.
Tom, are you, oh, go ahead, Shay.
Someone's going to make a lot of money by offering these massive bundles at a 20% discount if you get like 5 or 6 of these streamers at once.
But isn't that
Like
what cable was?
it's a flywheel. It's going to be like what
Yeah.
cable is. It sucks.
We're gonna go
Yeah,
all the way
I
back.
played that initial game of like trying to optimize because like through your cell phone plan and through this and through that and like individual providers like linking up. It's just too complicated. I just pay for each of them. Like if I'm gonna save $9, I don't care.
I
Yeah.
have a buddy who literally does one streaming app a month and cancels it and moves on to the next one and just does a rotation and just binges.
He is the worst nightmare of these companies. Like I am
so funny.
I am the dream because I'm like, I'm paying for Hulu twice because I paid for something with I was like, oh yeah, add Hulu, save money. But then I forgot I was already paying for Hulu. I got like 3
did
Hulu
that.
accounts
Yeah.
plus Paramount Plus. I even have Peacock. Like,
Jeez.
I think I wanted to watch a lacrosse game 2 years ago. And now if anyone needs my Peacock login, I know I'm not supposed to do that, but I don't think they care, frankly.
What typically happens is like I'll get an ad for their like crazy promo where it's like get Peacock for a year for $20, and I'm
Yeah.
like, there's got to be one show on there that I will watch, and I'll just like lock it in, and then I'm just
You're
a
like, no, there
customer for
isn't.
life apparently. So
I mean, that's what we're talking. That's what Oracle's doing right now. We were talking about that yesterday, giving the government a 75% discount just getting in there. I want to talk about Nvidia real quick because you mentioned it briefly, Tom. They are flirting with $4 million market cap right now. I think they're at 3.97.
4 trillion.
Oh, sorry, trillion. Did I say million?
Trillion, but it's okay.
I can't believe Nvidia
Just a
is
couple
worth
zeros.
$4 million trillion. And it's interesting. The first company that made it to a trillion market cap was Apple, and was not that long ago. It was 2018. Microsoft reached that milestone 2019. I mean, it's a 4x. That's insane. What we're seeing. Do you think that that's going to be like a psychological milestone that's going to push the stock forward, Tom, when they do cross that $4 trillion threshold?
I'm less concerned about the 4 trillion. Honestly, I think we're hitting it right now. I think the level was like 163.80 or something. So we might have just hit it.
Oh, wow.
I think what's more important from like a technical and psychological perspective is the 2024 highs near 150-ish. As long as we're above those levels, like all the trend traders, all the technicians, they're going to stay long. And again, it kind of signals that after a period of 9-12 months of no progress, that the stock is making its next leg higher. And I think that's what people are paying attention to. The 4 trillion is great for my news desk and like the rest of the media, but in terms of like a meaningful milestone for the stock, it's just another number. but
Yeah.
we might need a gazillion after this. Who's going to be the
I
first $1 gazillion company?
Well, curious your thoughts, Shy, because we've talked about this before of just like kind of like the rich getting richer in the AI era of these companies just have so many advantages. Do you think this is kind of going to continue to be a trend where some of these companies just get more and more powerful, and it's a kind of winner take all situation?
It is. I think we're in a place where we're going to be entering this productivity boom. So typically, the ones who have the biggest foundation in the world are going to benefit the most because of that. So I think that's we're in a place where like bigger companies can replicate existing products at a 70% accuracy, and that's going to be good enough. I think it's the beginning of something that's going to be very real, and that Lisa Khan is not being in the seat of the SEC. There's gonna be a lot more M&A as well because these smaller companies are gonna know like we can't compete with them in this new agentic AI world that is set out right now.
Yeah. Interesting. I don't want to spend too much time on it, but we always like to cover the cat fighting that goes on. Elon is crabby this week, it seems like. He kind of snapped at Dan Ives, which I thought his response was hilarious. So Dan Ives had a take, and then he just writes, "Shut up, Dan." Like, I don't know why that's so funny to me, but it is. And I went to a talk last night that Matt Levine was at, and they were like, "Do you try to be funny or do you just cover funny things?" And he's like, "These people are just funny. I don't even try to be funny." Um, but this is, I mean, Dan, I don't know if I don't know if he's the guy you want to take this out on. I think it feels crabby. We talked about it. Shy and I talked about it of like, it's just like kind of how it is with this is how it's going to be and like buckle up. Tom, did the community react to this at all, or people are just like, whatever? I thought it was funny and moved on with my life.
Yeah, it was more of a meme than anything. I think that the challenge for Dan Ives and every other tech analyst at this point, or Tesla analyst, is that there's been so much volatility. So I remember there was a week where Dan had to adjust his price target and view on the stock like 3 times in 1 week, and they were materially different.
Mm,
So I just think it's the nature of the game. Like these are, high flying stocks. People want updates when there's relevant information, and like he's paid to be an expert in these areas. So he's sharing his opinion. And clearly, Elon did not agree with some of the suggestions there. But yeah, again, I think this is par for the course for anyone invested in, dare I say, cult like stocks, where you
yeah.
are heavily invested in not only the underlying company, but the leadership itself. This is par for the course.
Yeah, it's always entertaining. We talk about sometimes the summer can slow down, but we always we're one tweet away from something fun to talk
All it
about.
takes is one tweet.
All it takes is one. Let's turn to EV. I think on the retail radar for Stocktwits, Lucid is sort of turning up, and retail's watching for a bounce. I actually saw Lucid on the street the other day, and that's a good looking car. I had not seen one up close. Those are sleek cars. I don't know anything about their business model or how they compete, but Tom or Shy, any thoughts on Lucid as they're sort of trending up this week?
Yeah, so I can jump in here quick because I wrote another piece last night and early this morning, basically outlining that retail was kind of ahead of the curve. So we saw sentiment increasing ahead of the recent bounce in the last couple of weeks, and same thing with message volume. Last week they got some news that their uh, one of their vehicles basically broke the record for how far it could go on one charge. I think it was like 1,200 kilometers or whatever. And it
Mm,
basically beat the previous record by about like 10%. So that was good news. And then from a production and delivery standpoint, they also had a record quarter in terms of those numbers. So I think there were a few positive catalysts here. Technically speaking, the stock has kind of hit this $2 level consistently over the last 6 to 8 months, and has found buyers at that level. So again, we saw retail kind of dig into that and take a position here, and now they're looking for kind of a short-term momentum trade. But long
yeah,
term, this company still has a lot of headwinds, and similar to Big Bear, there's opportunities for traders and people with different time frames to approach this stock on different levels. And I think right now we're seeing the traders jump in and take advantage of this renewed
You
momentum.
said 1,200K. So that's 750 miles. That's New York to Chicago. That's wild. I did not
Yeah,
know they could do that.
yeah, I was not aware either. Like, it seems like a far distance. Again, I don't really know where that fits in the whole ecosystem,
Yeah,
but
like
again,
how
it was a
fast are you
new,
going? Yeah,
yeah, it was a new world record. So like that caught some
that's
attention, and
pretty
clearly,
crazy.
they're doing something.
Yeah, Shy, I want to ask about EV in particular because I know you're bullish on Tesla, but not necessarily for the EV product as it stands, but kind of the future potential. But I'm curious if you think with Tesla focusing more on robotics, autonomous, do you think does that open up a lane for another EV player in the US to sort of step in there? Or do you think it'll be someone like a BYD in China who are already kind of eating Tesla's lunch out there?
I think it's going to be BYD for sure. I think if you didn't figure out the business economics already, you're not going to in this new presidency, especially with the EV tax credit removal.
Yeah.
I think it's going to be a death nail for a lot of OEMs. And I believe that EV didn't deliver on what a lot of investors were hoping for a couple years ago. I think it's mainly due to maybe the lack of innovation on like the car front. Maybe it's due to a hybrid is just as good. Like people don't really commute long distance anymore. I think maybe COVID changed things a bit where a lot of remote work got accelerated. So like if you people don't drive more than 50 miles a day now anymore. And if you don't do that, you don't really need an EV. A hybrid will just do the trick for you. So I think that that's like a pretty big movement, in my opinion. My gut reaction. Like I don't know much about it, but I think that is what's really happening, and it's just not a good space to really be into right now. I think eventually everything's going to be electric, but we're just it's a marathon. It's not a sprint anymore, and I think that this Trump presidency, you just don't want to be in that space at all. And for like Lucid, for example, incredible battery technology, but their fleet is a mess. Their business model is a mess. Like that's an I think UAE is a very big funder of their company.
Yeah.
I think that's one that's just gonna go private at certain
Mm.
points. I think Rivian is a good product. Uber probably is a great fit for them acquiring them, in my opinion. I think they'll go acquisition.
So
But yeah, I just
consolidation.
consolidate. Yeah, I just think the whole space will get consolidated into a Tesla and BYD, and I think that Elon did an Elon thing and got ahead of it, and now he's just changing the narrative, and it's working for
Yeah.
now.
I wanted for I know we're almost up on the hour, but I just spotted one of my favorite companies in the headlines, Hims, and I know people love Hims. They are rolling out their generic semaglutide in Canada. Big news after their public beef with Novo Nordisk. There was sort of a war of words over that. Some really nasty corporate speak going back and forth. But they're on the rise today following that announcement. I know, Tom, I think Hims is one of those stocks that I would say cult. Like people are
Yeah,
really into
definitely.
Hims. What are you seeing with this one as of late?
Yeah, cult stock, momentum trade, kind of classic example here. Honestly, sentiment and message volume are still kind of down in the dumps
Mm,
currently. I don't think I would attribute that primarily to the stock's recent momentum failing. I think, if you look at the chart around $70, we've tried to break through that level 3 times this year and have kind of failed. And so a lot of those kind of core momentum traders have moved on to greener pastures until the stock can really show that it's ready to make its next leg higher. From a
yeah,
fundamental perspective, lots of potential opportunities and catalysts here. I think it's what we tend to see in the community is like there's a core group of holders that are sticking with the stock long term. That's why there's still people that follow AMC and GameStop and all these kind of like traditional meme stocks. They're bought into the brand, they're bought into the leadership, they're bought into the company's long-term vision. They're going to stick with the stock regardless. But I think where you see a differentiation in the sentiment day to day is how the stock is performing. And that's where you see the
mm,
traders and those with shorter term time frames really driving the overall narrative. And right now in the short term, the stock is trying to bounce back from its recent gap lower on that Novo Nordisk news. And I think whether or not it can fill this gap and get back toward those $70 highs will tell a lot about overall both institutional and retail demand for this stock. And I think that's what people are watching here in the
Yeah.
short term.
And Shay, you've joked in the past about missing the boat on this one, but I'm curious if I know it's not one of your core themes, but how would you prioritize or place just like the future of health, like these weight loss drugs, like the TAM for that is huge. But is that kind of in the orbit of big themes you're watching at all, or are you kind of staying away from that overall?
Staying away from it overall, but I'm a thematic investor. That's why, like, telehealth is just not a theme I'm too bullish on. I just think
Hmm.
that there's a lot more under the hood regulatory BS that a lot of
Yeah.
people don't realize, and I think it's nice to see mission orient. Like, the reason these stocks have cults is because they're all mission oriented. Like, people want things to change, and I think in
Yeah.
healthcare specifically, they're fed up, like absolutely fed up with how the U.S. has been in the healthcare space, and that's why you're seeing Hims and Oscar Health, like two of the favorite retail names, catch a huge following because those are disruptors of that space. Like, those are the Trojan horses to maybe force some change. And I think that it's great to see as a someone on the sidelines, like even if I'm not participating, I want them to win because
Yeah.
I want the system to I want the irrational system to have a rational player. And when that happens, feels like something's changing finally.
Yeah, and stocks like this are interesting because it's the results and the impact of the products are so tangible. Like especially for retail investors. Like people who are using some of these products and it's changing their like it's so different than studying, a software company where you never sort of you can read about the impact but you don't see it. But I agree. I think there's almost like a sentimental piece to this. Tom, on to the rest of the week and into the earnings looking ahead next week. Are you working on any new stories? What's kind of swirling around your brain as we head to the second half of the week?
That's a good question. And just to kind of close the book on hymns, I
Yep.
do think there's kind of like any of these direct to consumer businesses are trying to, again, kind of democratize access to a lot of whether it be healthcare or trading or whatever. So I think there's kind of that underlying tailwind and underlying theme also helping hymns. But yeah, I think in the short term, it's momentum trade and momentum is broken in the short term. So we shall see if it gets its groove back. In terms of what I'm looking for in the week ahead, it's a quiet week on both the earnings and economic front. So I think the momentum trade is still to the upside for the overall indexes. Obviously, Nvidia just hit 4 trillion as we were speaking, so
Yep.
that's great. People are going to continue to trade to the long side as long as there's no clear catalyst for prices to move lower. And right now, like the market has been thrown a lot of curveballs over the last week or two, and it continues to move higher. So um, investors continue to look on the positive side of things. And I think we're supposed to get additional trade deals today with certain
Uh,
countries. So yeah, I mean, times are good. We'll see if earnings season next Tuesday kicks off with Wells Fargo, JP Morgan, Citi. We'll see if that changes anything. But for the rest of the week, it should be many are expecting smooth sailing.
yeah, we'll see. We got more tariff letters coming, as you mentioned today. So who knows?
Yeah.
Shy, I'll give you the final word as we close out for the day.
Uh, do the work. And there's
Yeah.
nothing you can do. Don't participate in the. I mean, if you're an investor, like, this is not the time to kind of participate when things are feeling. It's not FOMO-y. It's just extended.
Mm-hmm.
I think build your cash pile. What it's a different feeling when the market pulls back 10 to 15% and you have a 20 to 25% cash pile. And you can
Yeah.
capitalize on it. But as soon as we get it going on the cues, I as soon as we hit 541, actually, sorry, not 541, my bad. 515. Geez, we are way overextended that. I'm gonna use like my cash position, which is now like around 10 or 12%. I've actually been using my cash for some elsewhere, not investing, like some other avenues in my life. So I'm like not really a participant in the market as much.
Yeah.
I have a substantial portfolio in it, but I'm not
Yeah.
adding to it. So
Yeah.
just
All
be
right.
cautious out there.
Yeah. All right. Well, guys, it's been fun. Tom, I know you're back next week, so we'll get into all those earnings that are coming. To everyone else, we will be back here tomorrow at 9 a.m. Eastern with all the market headlines. Thank you for tuning in, and we will see you tomorrow morning.